Right, guys, welcome to Talking Markets. I'm Bishu. I'm just going to be talking about our new product, what I've launched. It's basically a product where we will share ideas on trades for the upcoming week, months, and also talk about any fundamental macro views that will affect your investing, basically. We'll be looking at the past week's headlines and also any upcoming headlines in the upcoming week or months. And from there, we'll be giving out some trade alerts via our private Twitter. And we'll be doing webinars and Q&As in the coming sessions. So love to have you guys on board and build this community, and hopefully you would benefit greatly from my analysis. So we'll kick off today of the market wrap, and this is from the past week of ending 5th of June. So what were the key themes? ECB was on tap, NFPs, and also risk on, basically, for the US market. Sunday we saw Caixin China's PMIs rose 55 from 44.4 in April. The reading stood above the 50 mark. That separates expansion from contraction. Even though it plunged below 50 for 3 straight months due to COVID-19 pandemic, the rebound was the steepest since 2010 October. Now, they're not out of the woods yet. They do still see their service sector hiring in negative territory for the 4th straight month, because companies do remain cautious about the expanding hiring and also the uncertainty of the economies around the world and in the coming months. And this is obviously a theme that's going to happen for the rest of the year. We don't know what's going to happen when it comes to the economy starting to open up, how companies are able to bear their finances. Are we going to see more bankruptcies? Are we going to see more job losses? And this is going to be a big theme this year. I mean, a recession definitely will happen based on that. And but the central banks are doing their best to make sure that the economies don't go into that position. So this is going to be something to look out for the next 6 months or so. So let's even look at the JP Morgan Global Manufacturing PMIs. That fell for 4th successive month as well. But the last 2 months have seen the steepest back-to-back drop in production since the first quarter of 2009. Weak global demand hints that recoveries will be frustratingly subdued in the months ahead. Let's talk about ECB, and this was the biggest event this week. So ECB, they increased the Pandemic Emergency Purchase Program, known as PEP, by 600 billion euros to 1.35 trillion. And they're extending it until June 2021 and pledged to reinvest proceeds from maturing bonds until the end of 2022. The market was actually expecting 500 billion. They exceeded the expectation by giving a 600 billion injection. So it was risk on for equities and obviously the euro in the last week of trading. Eurozone inflation slowed to a 4-year low of 0.1 in May from 0.3 in April as energy prices tumbled. However, if you exclude energy, food and alcohol and tobacco, core inflation actually was steady at 0.09. Inflation did turn negative in 12 of the 19 member states, but prices in Germany rose 0.5. And Germany is obviously the largest economy in the Eurozone, and ideally you want to be looking at German data, obviously Eurozone's data, but German data to see how Europe will follow. Finally, so the PMIs in Eurozone for May exceeded the initial estimate, rising to 31.9 from 13.6 in April. The data, even though it's below 50, which normally marks the difference between contraction and growth, it still signals the economy is shrinking around the Eurozone. So obviously we know that's due to COVID-19, but how the next few months also happens when the economy starts to open up and business start to open up, what will be the effects? So this is what the market's looking at in the next 6-12 months, so definitely something to keep track of, what the data is telling us in the coming months. Germany as well, the rulings coalition agreed a 130 billion euro stimulus package for the the country, and that exceeded the expectations by 30%. What does the package include? A cut in VAT, funds for 5G mobile networks and railways, and high rebates for electric cars. As you know, that Germany are trying to get more tax on diesel engines, and obviously for CO2 emissions. So the high rebates for electric cars is basically an incentive for people to buy more electric cars, so it's much more better for the environment. These stimulus measures include liquidity aid and loan guarantees, and it's a total third of its annual economic output and substantially exceeds the programs launched by other Eurozone countries. So I expect other Eurozone countries to follow suit and do exactly what Germany are doing, and that could only be positive for the economies around the world, just to get back on its feet, basically. So see what happens. Let's talk about UK. So the ex-Chancellor of Exchequer, Rishi Sunak, he's also preparing an economic stimulus package for July to help the economy cope with the severe recession caused by COVID-19, and this is what the Financial Times have reported. He's considering funds for the training schemes, infrastructure projects, and technology firms. So let's talk about Brexit now. And I think Boris Johnson is looking to look for an extension. End of this month, I think they want to give I think it's the deadline that they want to give, so they can get the extension past the year end. So this is what's going to happen in the next coming weeks or so, regards to Brexit. At the moment, they're at a deadlock. They can't agree on anything. So see what happens. U.S. markets now. Last week and during the weekend, the civil unrest in all states was causing concern with the governments, and wanted to see how the markets will react. Now, markets pretty much shrugged off all the bad news that's been coming out of America, and it's been risk on for equities ever since. So even the China trade tensions as well. The market has shrugged that off, and Nasdaq has rallied to all-time highs, and I expect the other US indices to follow suit. Some pharmaceutical companies, like let's say Gilead Science, they gave some concerns about, based on these riots and protests, that we could see COVID levels rise in this time. It could be, may not be, but that's one of the concerns that pharmaceutical companies are having. However, AstraZeneca, they're planning to manufacture billions of doses of vaccines by year end. They came out with that news on Friday, and obviously was risk on for equities in that process. Also, big news was NFPs. Stocks rose sharply based on ADP data, and that followed suit on Friday when the payroll numbers were only contracted by 2.7 million versus the expectations for a drop around 9 million. Now, the BLS came out and said that the numbers were wrong. There was some miscalculation in the numbers. So it'd be quite interesting to see what July's numbers will be, because the unemployment rate dropping from 14.7 to 13.3, in reality, it might rise up to like 16 to 17% come July, because they have their calculations correct. So it'd be interesting to see that data in the next NFP. Okay, so let's see what the world indices have done over the week. It's green everywhere, isn't it? It's had a great week for US indices, Europe, and also Asia. You can see here is S&P 5%, the Dow at 7, Nasdaq at 3, Composite is at 7, and the biggest winner out of the US equities were the Russell 2000 small caps at nearly 8% at 7.9. You couldn't go wrong with just being long equities beginning of the week. Hindsight is everything, but yeah, it was good just to be long. Let's look at currencies now. So the dollar index was the one that's been under pressure for the last few weeks, and we've seen a break in trend in the dollar. We're now seeing that dollar will be under a lot of pressure in the coming weeks. It could turn bearish. We've closed at 96.94, and you can see how the euro has been a very dominant currency throughout the board. I mean, euro over the dollar, and also even over the Swiss franc and the yen. So it was good to be short dollar, long euro, long pounds against the dollar. The yen was probably the best to actually be in throughout the whole week. You can see from euro yen and pound yen that look at the moves. 3.4 to 4%. If you looked at the other cross assets like Kiwi yen, Aussie yen, they were in the same region, around the 3%, 4%. So it was a good week for yen. To be short yen and long euro and pound. Bitcoin pretty much done nothing really. And Ethereum has was a 2% drop, and Ripple 2.8, nearly 2.7% drop. So nothing to really look at there. I mean, Bitcoin normally can do some big monster moves. So for the week, if you look at it, it's literally done nothing. Okay, what's on tap for next week? So key events, obviously we're looking at the FOMC meeting. They're going to give their updated economic projections. We're going to see some important GDP numbers and industrial production releases. They'll also give us guidance on second quarter economic downturns within the UK and the Eurozone. Asia will obviously be looking for clues, especially with China reopening the economy, to see how much they've been revived, and also await their trade and industrial production numbers across the Asia Pacific. With FOMC, we're going to look at ECB unleashing a 600 billion boost on its lending program. What will the US do? Obviously, with the COVID-19 pandemic already taking a huge toll on the US jobs market, that's obviously going to give a massive GDP downgrade. So markets will be looking towards that and looking at that closely, because they want to see what the Fed's stance is on it, and what they're going to do, basically, what's their projections. They'll be looking at how big the recession will be versus the speed of the recovery. Just something here is as a prior meeting, FOMC held the interest rates near zero, but in the minutes they revealed that policymakers are prepared to adjust their stance, including elements of its various emergency lending programs in response to evolving financial conditions. Inflation data for the US are released together with consumer sentiments numbers for June. When you look at the inflation data and consumer sentiment numbers for June, they're going to take that into account, obviously, and for June, for the next few months, and see what they say on Wednesday. So that's going to be a big event, and see what happens during that time. Again, Europe, they're looking for GDP data within the UK and industrial production numbers in the Eurozone. Give you further clues about the economic downturn second quarter. And anything in Asia? Asia, yeah. Credit and money supply will be a key release for China. to show the insights of the pace of the recovery in the actual country, to see how it's been recovering since the economy has opened up. Also having any relaxed virus related restrictions earlier as well in that country. So we're going to look at some charts now, and after that, then be happy for any other requests, what you guys would be interested in. There'll be more coming, obviously in our private Twitter group. I'll be posting real-time trade alerts, trade ideas, any other news events that's come out, any other research that I get, I'll release that on there, and that way, we can just build a community and get a better idea of what the markets are doing on a day-to-day, week-to-week basis. Okay, so we're now looking at a chart of the S&P 500. This is a 4-hour chart. Let me just give you a bit of context of. Let's look at a yearly, right? Okay, so we got the lows here and pre-financial. During the financial crisis, 666, all the way to the highs at 3398, and this is our mid-range level. Here, the 50% level, you can see that during the year it was a significant resistance, and once it powered through in 2016, the markets never looked back, basically. So this is just a bigger picture of bigger levels to look out for, and this was a big level here at 27.15. So this is a level that I'll be looking at between the 27.70 and the 27.15. If the market looks to do a downtrend, then a break of this, then I'm looking around here, right, basically, to bottom out around the 2033 level. So let's have a look at quarterly. You can see that it's still bullish. There's nothing stopping this market, and basically anytime you do your chart analysis, just look at the higher time frames always. What is it telling you? What is your higher time frame is telling you? Price is telling you everything here. There's nothing bearish about this market yet. Have we broken bear levels? Of course we have, right? And I'll show you what bear market levels are. Don't know what happened there. Just bear with me 1 second. Here we go. Okay, so here we are at the monthly. Monthly, we're nearly at the all-time highs. The Nasdaq has broken its all-time highs. Is this going to follow suit? I think so. Even if you get a pullback, I think it will suck a lot of bear people in, and the market will start to rally. If we see a pullback in Nasdaq, that might give the pullback in the S&P, but I think that'll be buying, because I think we might see rotation, people coming out of the Nasdaq stocks going into S&P, and that will further rally, give the impetus for it to rally to all-time highs. This is weekly. Okay, so weekly you can see here, right? Okay, important level was this week. You can see was this resistance level here, 30.27. Okay, that was the July high last year, and you can see even here in this region, there's a lot of price action here. Okay, once we broke above even this candle here on the October 28th week, market has not looked back ever since. It's just rallied all the way to all-time highs until this bigger drop. Now this is the same. It's the same resistance. We broke through a couple of weeks ago, and could we sustain it? Yes, we did. It was all about this week. Could we sustain this week? Now we dipped through briefly, tested the July 2019 highs, and we're off to the races. Now what's next? Well, I have these areas here. 32.19, 32.83, and then 35.39. Obviously, we've got the all-time highs here at near the 3400 level. Let's go down to the daily. Daily, you can just see one ray train, right? So where am I looking? If I was to get on board, what am I looking for? Will the markets, even if the markets open up here, because this is strong resistance level at 30.21, 30.22 level, I wouldn't want to initiate any shorts or even any longs. It has to break above, right? So I do like this area. Okay. I do like this area here for longs, right? Also going back to the 31, if the trend is really strong, 31.58 would be a good area to initiate longs as well. But anything around this area, even here, around the 29.97, I'll be happy here, and also anything low is 28.55. But let's look at opportunities here. Right. Okay. So you can see here why I've highlighted. You can see why I've highlighted here. I'll tell you now. Look, markets broke up from its support, turned that into resistance. Okay. So we've come up, and we've tested it, retested it, and we rallied off it. That gave you the bullish sign that the market has now turned that support into resistance, and we're off to the races. Okay. We've got some demand. We've got some supply over here. I would initially like the pullback into. Let's just get here, and then if we can, off to the races to at least 32.83. Now, if we get a bigger pullback, then everything needs to be put into context. Okay, so it's easy for everyone to say, okay, we're getting a pullback, that's it, it's the start of the new bear market. No, I mean, we need to break the 2770, 27, the 27, basically the 2770 to 2700 level would get me bearish. Would get me bearish all the way down to the 2033 level, or maybe testing the 2180s levels. Now, I will show you the SPX chart, because one thing that we have to look into is gaps. And I know there's a lot of people that would say, oh yeah, gaps are just a fallacy, but I'll show you. I mean, it takes a look. You should never trade gaps. I do say that gaps do one day fill. It does take a long time, and I'll show you from even last year's gap, on October last year, this gap. You filled this year, so yeah, gaps do fill, but it just takes a long time. I wouldn't make that your main strategy at all. It's not going to work. So even here, okay, so let's go down to the 1 hour chart. Okay, you can see at the end of trading, obviously that was probably a profit taken. Could we be just getting a pullback into here at 31.55? Okay, and then up, right? If you get a bounce here, I'd initiate a long to the to 32.20 level. Even if it is a little bounce, even to the 31.89, 31.90 level would be a good trade. Initiate, let's just say with spread 31.60 to 31.90. It's a good trade, but there you would just the ultimate target would be 32.22, and then look at 32.53 and then 32.80s. Okay. Now, if you want to be bearish, you can actually look at if the market rallies up to here, takes it out, falls back in, gives you a retest, and then I would play it down to the 31.55 level. Okay, it could go under the NFP lows here, so you could look at 31.34s, but just to be safe, you you get it down to the 31.55s. Underneath that, initiate another trade. Book in some gains. Another trade could easily come down to here, and I would trade it down to the 31.20 level. This area that I've been highlighting as potential longs. Yeah, and if it keeps on going down, then the map. You can see it here. Take a picture of it. These will be your target levels. Now, even if you looked at support and resistance, we've got here. Market could come back into here around the 31.45, 31.50 level, and then we can go up, right? Okay. If you want to initiate shorts, we've got a lot of supply here, so this could be, this is your demand zone, and you can see a supply over here, where markets for a couple of hours fighting to see what direction it wants to go. We finally broke down, and yeah, so this could be a retrace into let's say the 3200 level and then down. So ways to play this market, there's ways to play this market. We've got support here. We've got support the 31.30-ish level. Okay, but you see support turned into resistance right here. Okay, even got even support here. So there are a lot of support zones we can look at. But first things first is you've got to let Monday unfold, see what's happening. If we do get this drop all the way down, you want to look at buying opportunities. Only if, I would say, you want to look at short-term opportunities. We break below 31.55, we get that rejection candle, and we got bearish price action. Something like, let's show you here. Something like comes down, gives you a little bearish action here. You want to take that down to this level, possibly down to 30.90. Okay, so you want to see bearish price action. You want to see price stalling or giving you, if you get this, that, and then here, and then up again, right? And then you got this price action level, yeah? Then you initiate longs, a break above it, and then looks a bit messy there, but you get my drift. So yeah, you want to make sure you're not just jumping into trades just because you see a big red candle that comes down. That could just be anything. You want to get some trade confirmation. If you see a big red candle coming down, you want to see a retracement back into here before you come. Does that make sense? It's okay to miss out on trades. There's other trades, there's other opportunities. Markets will give you that. Obviously, sometimes the markets have not given us any opportunities this week because overnight moves have been so relentless. So let's move on. I mean, this is the S&P. This is my plan. I want to short if we have a bearish sequence underneath 3220s. If not, I want to be long around the 3155 levels. If that breaks, then if not, then it will be the 3120 to the 3090 area. I want to be long, targeting the 3283 and upwards towards all-time highs. Okay, that's pretty much what the US equities. I mean, you could do the same with the Dow. You could do the same with the Dow. You know, this area here. We want to look at. This will be a good area to look at longs, even if you was to go down to the daily. Okay. Yeah, I like this area for longs between the 26,300 to the 26,000 area would be good for longs. Come into here, good healthy pullback, and then off to the races. As you can see, I mean, the Nasdaq has taken out its all-time highs, and that's not a cause of concern. But yeah, you can see it only gave a little bit of a rejection. That was the concern with the Nasdaq. Once we hit all-time highs, look at the pullback. It's literally nothing. It's been a one-way train all the way through. Even if we just, if you look at a trend line, even this channel has not even, no, that channel resistance, fair enough, but this hasn't even come back into here to give us any other position to say, okay, we're gonna go long. It's not even done anything, and it's powered through. So yeah, I mean, I fully expect the S&P 500 to. I mean, just look at S&P 500. The only caution I have is look at these gaps. We've got one here. Big one here. This is a big one here. This is a huge one here. And then one big here. One big here. There's more gaps, of course. There's one right here as well. But gaps do fill. But look how long it takes. Look at this gap. When was that? October, yeah, that's right. See, October last year, the market was relentless all the way up. And it took until March. So gaps do fill, but they're not 100%. I mean, you've got a gap all the way down to the lows of the financial crisis. Would that fill? Probably not. You never know. But gaps do fill, especially got some big liquidity gaps here. What also that tells you is that the market's so strong. When you've got these big runaway gaps, the market's really strong. This is what everyone is eyeing now, isn't it? This big large gap fill. Get into that, we might even see resistance fall off, but then ultimately go higher again. Okay. Let's look at DAX. DAX is interesting now. Okay. So with DAX, I've been looking at the strength of this market. It's been relentless. I do like it to the upside. Let's just go back to a month. Look where the market has gone. It's been parabolic for the last 3 months. Let's look at a 4-hour chart now. These are just levels that I have put up of areas of interest that I want to do business. Okay, and you will see here once we broke past the 11,900 level, market has been very, very strong. A little bit of pullback, up again. Now, what's my plan for the DAX? Obviously, buy pullbacks, of course. Anything down to 12,659. See how that holds. I want to be buying it, and then look for targets at the 13,008 level. Okay, anything below that, then we can be again buyers all the way down, like this area here, at the 12,066 levels. Yes, we've got areas here that we can still do business in. Okay, down the 12,535 level, and so there are ways to navigate this market. I would be better off waiting for a pullback. If this market lifts off, then if this carries on, then look here, look for bullish price action, and then look for 13,358. Okay, any pullbacks, you want to be a buyer, but if it keeps on going deeper and deeper, it's fine. Okay, unless it breaks the 10,900 level, you want to be buying pullbacks. Okay, and I'll update that in the private Twitter group anyway, where I'm looking to enter. But you'll see there is definitely opportunities. I mean, you can go all the way down to the 15-minute. And you will see that there's significant support and resistance zones. So even here, this will be a good favorable long, right? The only thing is that your risk is all the way down 200 ticks. But if you get a good entry into here, and then you want to see bullish price action at least, and then comes up to the 13,000 level, that'd be good. It could even go back to this resistance zone at 12,656. If you're not comfortable there, take it off, and again, it's a restart. Get more bullish price action once it does, and then take the trade. You don't always need to be in the trade. It's nice to get the big 10-15% trades, but end of the day, it's all about managing your risk. If you think that you're uncomfortable up here because it's at a major resistance zone, then fine. Take it off. It's not a problem. Would I be favoring shorts? Not really. If you want to scalp, then below 1260, give me some bearish price action. Then I'll probably target 1251, and then 12,551, and then probably these lows here, 12,1320s. Ultimately, a great buying opportunity would be the 12,000. So yeah, like level to level, from here I want from 12,660s, I'd target initially at 12,35s. Let's just say where would be definitive targets. Yeah, we got this resistance zone, but yeah, 12,483s would be a good take profit. If not, ultimate target 1, sorry, would be 12,483s, and then target 2, 12,305s. So that's where I would be looking for taking shorts if I was. But ultimately, I want to be taking longs. But these are good scalp opportunities. I will be putting those in the Twitter group. Okay, let's look at some currencies. Right. I think USD yen is shaping up to have a big move, right? This is a yearly chart, okay? High, low, 50% is here. The yearly high at 112, 22.8. You can see here it's obvious that this has been good resistance back in January 08, even here in 04, pushed above it, closed below. 06, pushed above it, but you know, even every time we've hit this 50% level, there's been some significant reaction. Okay, so even here, you know, we've had a reaction this year, and then we went all the way down to 101. This is on a year level. So if this was a you know, an hourly chart, you know, you'd probably think this is a bullish wedge that's forming, that's going to go to the 129, 130s, even take out the 147s if you really thought this was really bullish. And I'm in that camp of I think that a dollar yen will go to the upside. We're above our yearly open now. 108.62 was our yearly open. We're at 109.56. So it bodes well for the yen pairs. I'm giving you dollar yen, but you can easily look at euro yen, pound yen. So yeah, we're stuck between this range. You see on my quarterly chart here. So every time we've come in, every time we've come into these zones, we've had a reaction. It just can't break it. Any close below 105 on a quarterly level will then target a 93.75s, right? So at the moment, we're just trading within this range, right? Within the range of 106s, 105s to 114s, okay? 113 to 114s, okay? So ideally, you want to see a break above that, and then you can see we'll probably run these. We'll probably go to 120, and then probably run these highs, 118, and then 126. You know, so we'll get to that once that trade, if that trade, does give us the opportunity. But as it stands now, you can see the quarterly, it's bullish. You know, we've had it looks like a rounded formation, and I'd play up to 114s. This range here, that's what I'll be doing. You know, you can just see right here, look, oops, you can see right here that we've got significant resistance here, support here, and this has just been playing this range since 2017. Yeah, we broke above it, but a month later we broke back below. So that was a fake out, okay, and then we just traded all the way down, okay, back up again, down again, mid-range, come down, and then we're still here, right? So how would we go on board this currency if I do believe that we're going to run up to the 114s? Okay, well, I actually want a pullback. Of course we do, we all do, right? Anything into the 108s, so best entry would be, which I would love, 108s, okay, because this is a breakout, This candle here was the breakout from all this congestion, okay? And then first target 111, these highs here, 111.80s here, but then ultimate target is at 114, right? If it doesn't go that low, then a simple pullback into the yearly open, 108, 60, 60s, 62, 64s, you know, and then again initiate trade to target first 111, and again if the market just keeps on going without us, let's go, let's see. Right, okay, so even if the market goes on without us, let's just look at how we can get on board. If you're really eager to get on board, this level needs to hold. It'd be a great level, well, not a great level, but it's a level that you'd want to see some bullish price action between the 109.30s level, and then look for 111s, right? If that doesn't hold, then you want to look at this area, okay, the 108s, 90s, and then so forth. Below, there's nothing else, probably, yeah, look, this area here, basically, you want to be looking at for longs, yeah, stops below 108.40s, and then see how it goes, okay? If it pulls back all the way into the 108, it's a good opportunity. If it breaks 107s, trade's invalid, you know. We can easily trade back into that range again at 105s, right? So yeah, I mean, it looks really good. I like it. I like the yen. I like how it looks, and yeah, see how it fares, you know. I think we've got some good opportunities in the dollar yen. Look at euro yen as well. I mean, you know, even look at euro yen. You know, obviously a bit extended at the moment, but yeah, you know, we've broken out some key levels above here. So could this be the bottom of this channel before we go up? Who knows? We just play it level to level. End of the day, we got key levels here. Let's you know, you got some key levels here. Okay, you can see why they're key levels. You can see here. Okay, here. These are key levels where we're at the moment. Market come up and has rejected it. So it needs to break above the 123s, 124s basically, before we can start to see that, okay, we're going to see some more upside in the euro yen. I mean, this is what you call a trapped. This is how traders were trapped. Let me just run the monthly, right? So let's go down to the weekly. This is what you call a classic trap for traders. So this is what you call the monthly. This is the monthly resistance. Okay, sorry, support. Sorry. So we came in this monthly, come up, come back, retested that. Tried to break it, traders got short, snap back, right? Okay, so you're probably thinking, oh, okay, that doesn't tell me much. Okay, now let's go to the weekly. This is another one, right? Market comes down, okay? Markets comes down, bounces up. I think it's a bear market bounce, okay, because we got low highs, yeah, lower highs. Okay, there's another lower high. Market's going to dump, right? Okay, takes out this low, takes out this key low here, closes above it. Market's rallied. Right, so now you're seeing that. Okay, is there a trend change? Maybe, right? What gives me confidence that there is here, right? It's the break of that. It's a break of that high low, right? So if we do come back into this position here and come up, that will be your long, right? And have a look at even Japanese yen versus the pound. It's the same. Look at this level I've putting down here. Look at this weekly level. Market comes in through higher lows, lower highs, lower highs, lower highs. Comes through. Okay, makes a higher low, comes. Okay, fails here. So this now looks like a continuation of the trend, right? It's still bearish, on a weekly, you're thinking, okay, it's still bearish, but this is where people got trapped. We broke down below this key level, this low, and rallied up, and ever since it's been bullish in the last week. So again, it's taken out this level. So anything into here, you will want to buy. Yeah. If it breaks below this level, the 124s, 50s, then yeah, we're going much lower. But as it stands, I think it's broken trend, and I think now we're on the way for higher levels. Could be up to test January 18 levels at 156, but level at a time. I'd probably be looking for 140, and then 144, and then 148. Okay. What else is there? Okay, Aussie. Let's look at Aussie. Okay, you can see yearly. You can see where we are in the yearly. Massive resistance, support and resistance here. Okay, literally at the yearly open. Okay, and Aussie is approaching its yearly open, which is interesting. But yeah, it's not traded around much. You can see here in the yearly open, well, it looks like, well, this wicks. It's a lot of wicks. It's in this area here, right? It's in probably this little box here, where you see a lot of trading. Okay, this here. So I expect the market to be in this region by end of year, right? So let's look at a daily. Where are we? Where have we come from, and where are we now? Okay. Okay. Market has broken its yearly open. Okay. Come down. This is the COVID drop, and now retrace the whole COVID drop. Okay. Come into the yearly open, rejected it, and have come back down. And again, this is also resistance and support. The key support and the key resistance where the line in the sand was for trend change. Okay. What we need to do is obviously break above the 70-20 level, hold it, and then I think we've got levels to work with. 77, 75s, would be good starters. If we go above, if not, then I like a retracement down to 66.8s, 80s. This is that key level here. Okay, you can see how pivotal that is. Okay, support, support, comes in, resistance, down, okay, comes up again, comes into resistance, 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 okay, before the market punches up. Right, you can see right here, market punches up, we've now hit into critical support, sorry, resistance. I expect market to probably come down to 66, 66, and then we resume higher. Obviously a breaking trend, I'll probably see anything below 65s, I'll then reevaluate and think that the market's probably going to go lower, but I'll give you the update on that when I see that. Okay. Euro Aussie, look where we are. Okay. Pre-COVID, pre-COVID rally, we've now done the whole rally. We've retraced the whole rally. We're now in this area. I don't see anything here. Sorry, someone requested this chart. I don't see anything here. All I see is all I see is the market break out of trend, come in, and now we're retesting its trend again. So it's like a breakout retest. So if this was an hourly chart, you were thinking, okay, markets come in, come down, come up, resistance again, come down, come up. We still got this band of resistance, and finally exploded up, right? I've missed this move. So could we just retest where we come out from, where we broke out from, and go back up again? Possibly. Or so you could do something like this. Yeah. Or maybe this was just a pure fake out and we're back in this trading zone. Right? I mean, what's the risk on currency? It's the Aussie. Since equities have been rising, Aussie's been stronger, right? If Aussie starts to if the Aussie currency starts to pull back, then yeah, you can see strength in across all cross assets against the Aussie. So selling Aussie yen or buying the Euro Aussie or pound Aussie, they'll be the plays. So definitely have a look. This could definitely be something to look at for the coming week, right? But yeah, I mean, ideally, it comes into this area where we broke out. Okay, failed these breakouts, coming in, that's turned resistance, and then bang, support going to resistance, and we go back up again. But who knows? Check out what the Aussie does. Same with Kiwi. Kiwi is actually more stronger, really. It's come in. We're in its trading range, basically. And we're approaching the yearly open, right? And it's been quite strong. So we broke out some critical resistance. Okay, ideally come in, make into support, and then up, right, to the 67.33s, right? Pounds are getting interesting. It's coiling here on the yearly. What's it doing on the quarterly? Again, we've got a quarterly move up. Okay, so pound is strong. I mean, the only thing is about pound right at the moment, if you go to the weekly, it's at its critical resistance, right? Even tested this weekly candle here and had a reaction off this. Pound is strong at the moment. Yeah, I mean, you can see, sharp move down, sharp move back up, taking out this candle, bullish engulfing. A bit of a retrace now, maybe near the 50%, and we're off to the races. Where can we go? Anything above these levels, down to 125, you can look at buys. You know, this is still a good support area. Above here, you want to be looking above 127.30s. You know, we've got some good trades up to the 132s, to the 135s, right? I'll be posting that once I see Monday unfold and see what's happened. So yeah, any other questions, let me know. Be happy to answer them. But yeah, I would say here, and then just put something in, right? Okay, it's just follow me. So on Twitter, you can see me at bish_Gupta, okay, and yeah, look at long2bear, .com. Right, okay, so look forward to seeing you on the other side. Follow me on Twitter, bish_Gupta, and if you want to jump on board on our Talking Market products, there's more to come. Be happy to see you there, welcome you there, and any other questions, or just DM me, and let's see what we can do for next week's video. So in that time, I'll see you next week.